Hello there. Welcome to Financial Accounting Info. Today we want to look at a question paper of October 2020. This is question paper that we have, and then on that question paper we are going to look at question 3 on that question paper. And this question requires us to prepare the balance sheet and notes to the balance sheet. So this is the question that we have. The question reads, the information below was extracted from the books of Cindy Trading Enterprise. And then we've got post-adjustment trial balance of Cindy Trading Enterprise on 30 June 2019. Then we are given there, this is the trial balance that we have. And then if you go down, you see that beneath that we are given additional information that is there. So on this additional information, we've got depreciation for the vehicle and equipment was provided at 21,600 rands and 16,812 rands respectively for the current financial year. Then on item 2, we've got an old vehicle with an accumulated depreciation of 51,000 and a book value of 39,000 rands was traded in on a new vehicle of 120,000 during the financial year. So on the required part now, on the first part, that is 3.1, we will prepare the balance sheet of Cindy Trading Enterprise as on 30 June 2019, and then we have got complete the following notes to the balance sheet. So the notes that we have there, we've got property, vehicle, and equipment, then trade and other receivables and capital. So these are the notes that we are going to prepare. But we find that these notes comes as calculations of figures that we are going to input in the balance sheet. So what does it mean? It means that these are pre-calculations that we have to do. So we need to do this notes before we go to the balance sheet, because we are going to post these values in the balance sheet. For example, property, vehicle, equipment, they are going to be under non-current assets, and then non-current assets becomes the first section in the balance sheet. So this is what we have. So we can go to the property, vehicle, and equipment notes and see how we are going to go about it, right? When we come here, this is our property, plant, and equipment notes. We have got 3 columns that we have there: gross carrying value, accumulated depreciation, and then carrying value. So on that one, we are going to use the values that we have in the question. So we can go back to the question and see what we have in the question. So if you go back to the question there, you'll see that this is our question, the figures that we are given. But if you go there on top, there is post-adjustment trial balance of City Traders Enterprise on 10 to 2019. So this is where the year is ending. So it means the values in this trial balance are representing values at the end of the year. So basically, what does it mean? It means in terms of equipment, we have got equipment with the value of 150,000 at the end of the year. And then accumulated depreciation of equipment, we've got 42,732 at the end. So to find the final value that we are going to put in the balance sheet, we are just going to say 150,000 minus 42,732, and then the answer we post it as the carrying value in the statement of financial position of the balance sheet. So it means we are just going to take these figures. Why are we doing so? It's because at the date shows that these values are at the end of the year. But if these values were at the beginning of the day, we are supposed to make some adjustments in terms of what was purchased, if it's there, any additions and disposals, so that we get the closing balance of that non-current asset. But in this sense, we can just start with the cost at the end, and then we subtract the accumulated depreciation. So we are going there. You'd see that for land and buildings. Let's try to see what we have there. Land and buildings is here 294. So land and buildings, we have 294 here, and then vehicle we have got 240, and then for vehicles we have our cost is 240. Which is the gross carrying amount, is going to be 240. And then if you go to the accumulated depreciation of vehicle, where we are having it year 40,608. So we're just going to say this one minus this one. Then we go to the other non-current asset that we have is equipment. So on equipment, we are going to take this as our gross carrying value of the cost. And then we go to the accumulated depreciation on equipment this year, 42,732. So we are just going to input these figures. Then for landed buildings, remember landed buildings does not depreciate. So this 294,000 is just going to be again the carrying value at the end. So we are just going to put those figures. So if you come here to see that we've got the column for gross carrying value. So that's where we're going to put the cost here. And then accumulated depreciation, we have the figures there. And then we subtract now gross carrying value minus accumulated depreciation to get the carrying value. So here, let's start with the first non-current asset, which is land and buildings. Land and buildings. So we have got 294 here. And we said there's no depreciation for land and buildings. And then we have 294,000 at the end. And then the other non-current asset that is there is equipment. And on equipment on the gross carrying value, we have got 150,000. And then the accumulated depreciation is 42,732. And then this one we subtract it from this one to get the carrying value. So if you subtract there, you're supposed to get 107,268. So this is our carrying value. Then lastly, we have got vehicle. So the gross carrying value according to the information that we have in that our trial balance is 240,000, and then accumulated depreciation is 40,680. And then we obviously we are going to subtract, and then the net value that we are going to get there is 199,320. So this is what we have. Then obviously we also need to calculate the totals there. So in underline here. So we also need the totals there, whereby we are adding this column, then we add the other column. So for the first column here, total is 684,000. Then here we are adding 42,732 plus 40,608. And the answer that we are supposed to get there is 83,104. Then I show it in brackets since we are subtracting from this one to get this one. Here we add again the total there 588. So what does it mean? It means now this figure is the one that is going to be we are going to post in the balance sheet as property, plant, and equipment now. So this one is the one which is going to the balance sheet as representing property, plant, and equipment. So this is what we have for the first note. Then the second note, we've got we are also still on property, plant, and equipment. We are also supposed to prepare the reconciliation of carrying amount, whereby we are trying to find the we are trying to find the carrying value at the beginning of the year. Remember, these are the carrying values that we have at the end of the year, these ones. So we need to go back to see what was the carrying value at the beginning of the year, because we've got some information in terms of what was disposed and what was added in terms of additions and disposals. So we can go there to check what do we have next now on the reconciliation. So this is our reconciliation of carrying amounts. So the figure that we are going to start with here on the reconciliation now, we are going to start with the balance at the beginning of the year. Balance at the beginning. Balance at the beginning. But this balance at the beginning, we don't have it. This is the balance that we want to find. So we are going to leave it blank. Then we are going to come back by making balance at the beginning, the subject of the formula, so that we can find the figure, the missing figure, that is the balance at the beginning. All the other figures, we have them. Then on the, after balance at the beginning, we go and look for additions at cost. Additions at cost. Additions at cost. So we go to the question to see what we have in terms of additions at cost. But if you come here, you can go through this statement. An old vehicle with an accumulated depreciation of 51,000 rands and a book value of 39,000 was traded in on a new vehicle of 120,000 during the financial year. It means this one is the one which was added, which is 120,000. And uh, this addition is 120,000. So we are going to put it in the column of vehicles. We are going to put it in the column of vehicles, so we can go there 120,000. So additions, we've got the addition for vehicles, which is 120,000. So we are putting here 120,000. And then we are seeing that there's no addition for equipment, no addition for land and buildings. Then we go to disposal. Disposal at carrying value. Disposal at carrying value. So we go there to check what we have there. So we see that this vehicle, there's a vehicle which was disposed there with a book value of 39,000. It had a book value of 39,000. So this is only the one that was disposed. So we can go there and put again 39,000 under our vehicles. So you've got 39,000. So whenever it's disposed, it's going out, so we are subtracting it so that this one is going out. Remember, we are saying balance at the beginning, we add costs, we less the disposal at carrying value. And also we are supposed to less depreciation so that we arrive at carrying value at the end. So beneath that again, we are going to have depreciation. Depreciation. So on depreciation, we go there again to see what depreciation do we have. But for land and buildings, we know that there is no depreciation. So we're just going to leave it blank there. And we check depreciation for equipment and vehicles. So if you come back, here you would see that we are given depreciation at item 1. Depreciation of the vehicle and equipment was provided as 21,600 and 16,812 respectively for the current year. So what does it mean? For vehicles, it's this one 21,600. Then for equipment, 16,812. So we can just go and put them as such. So here we are saying equipment is 16,812. And we are subtracting it. Then we come here, we've got 21,600. We are subtracting it again. Then this is the last one. Then we can now close off. We can now close here. So for carrying value, and remember, we calculated these carrying values just above there. We calculated these carrying values just above there. And what did we find? For land and buildings, we said there's no depreciation. So it's 294,000, which is the same as at the beginning, since there are no adjustments during the year. So here again, we've got 294,000. Then for equipment, the carrying value that we found for equipment was 107,268, 107,268. These values, we calculated them. And then for vehicles, the one that we found there was 199,320. 320. So this is what we have there. Yeah. So the balance that we are using there, the formula that we are using there, we are saying balance at the balance there at the, we are saying balance at the beginning, balance at the beginning. Then we are supposed to add additions, we subtract disposal, and then also we subtract depreciation for the year. For the year is equal to balance at the end. So this is the formula that we are using. Then the figure that we want to find is the balance at the beginning. So we are just going to make it the start of the formula there. And obviously it's going to be balance at the end. We add disposal, we add depletion for the year, then we subtract addition. So this is the formula that we are going to employ there. So this is exactly what we are going to do so that we find these figures for balance at the beginning for equipment and vehicle. We are just going to make a balance at the beginning side of the formula there. So it becomes balance at the end. Balance at the end, you add depreciation for the year, you add disposal at carrying value, then you subtract additions at cost, then you find your carrying value here. So to do that now, the answer that you're supposed to get for equipment here, you are supposed to get 124,080. 124,080. Then for vehicles, it's 139,920. But as this is just a reconciliation, remember the figures that we are going to post to the balance sheet are these ones. That is our balances that we are having at the end. So this is what we have in terms of reconciliation of carrying amount. So from the reconciliation of carrying amount, we are now going to the trade and other receivables notes. Trade and other receivables note according to the question. So this is what we have in terms of trade and other receivables notes. So obviously, in trade and other receivables notes, the figure that we are going to start with is the figure for creditors control, which are the trade debtors, the trade debtors, accounts receivables, depending on the question. So the figure that we are supposed to get there is 34,452 for trade and other receivables. So we can just go there and check the trade debtors in terms of what figure do we have for trade debtors. So if you come here, we want to see what actually do we have in terms of that figure. Right. So you'd see that the figure for debtors, let's try to see what we have in terms of debtors. Debtors is here. That's where we are having debtors here, which is our 21,000. We have got our 21,000 as our debtors. So we can just indicate here. Our debtors are here, 21,000. Then after inputting our debtors, we are also supposed to subtract the balance for provision for debt for that year. And then we've got provision for bad debt here, which is 900. So we are going to take 1,000 to subtract 900 so that we get our net debtors figure. So we can go there and just put those figures. So here we are saying trade debtors, the figure that we have there is 21,000. And then obviously we are now subtracting the provision for bad debts. Provision for bad debts 900. And we are saying we are subtracting it to get the net debtors figure. So we say 21,000 minus 900, we don't get 20,100. And this one becomes our net trade debtors. So this is what we have. Then beneath that now, we can also check for any prepayments of expenses or accrued income. All of them, they fall under the trade and other receivables. So when we are on trade and other receivables, we check for accrued expenses. Sorry, we check for accrued income, and then we check for prepaid expenses. So for prepaid expenses, we've got this one, 1,386. Then we also have an accrued income there, which is 12,966. So we are just going to put them again. These ones, add them to the figure for net trade debtors to get the total for trade and other receivables. So we go there. We go there to check what do we have. Right. There we are saying we are now having prepaid expenses. prepaid expenses, and you have 1,386. And then we've got accrued income. On accrued income, we've got 12,966. So this marks the end of the figure that we have in terms of trade and other receivables. So we are now adding this one, which is our net trade debtors. We add our prepaid expenses, and then we add accrued income to get the total. That is 34,452. So this is what we have in terms of trade and other receivables. Then we are now left with the note for capital. We are now left with the note for capital. So this is our capital note. So this is our capital note. So you see that in the capital note, the formula that we are going to employ there is that we are going to say closing capital. Closing capital is equal to opening capital. We add net profit for the year. We subtract drawings so that we get our closing capital. So this is our formula. That's why we are going to start with opening capital here. We are just going to start with our opening capital. That is our balance at the beginning of the year. Balance at the beginning. Balance at the beginning. So the figure that we have there for balance at the beginning, we go and check in the question what we have in terms of that balance. The figure for capital is here, 570,000. So 570,000 here is our opening balance. Then we are going to add net profit. We are going to add our net profit there. So we can just go there and put our 570,000. So we have now 570,000. And then we are going to add our net profit. So we go and find the figure that we have there, and then finally we less our drawings. That is we subtract our drawings. So we need to go and find the figures that we have in terms of our net profits. So you see that our capital, our net profit, our net profit for the year is here. We see is 28,365 here. That's where we have our net profit for the year. So we're adding net profit, and then we are lessing drawings. Drawings is here 6,300. Then we get our closing balance. So you can just go there and put those figures. So here we are saying net profit, the figure that we have there is 28,365. Then for drawings, we have got 6,300. So this is the one that we are subtracting. So we subtract here, we add here, we subtract, the final figure that we are supposed to get is 592,065. So these are the figures that we have. So this is the figure that we are going to put in our balance sheet. So these are the notes that we have. So we completed the notes part. Now we go to prepare the balance sheet. So we can go back to see what we have in terms of the balance sheet. So we are now on our balance sheet. So remember, we have done all the pre-calculations that needed to be done. So now we are on the balance sheet. So the section that we are going to start with is on non-current assets. So here it means we are going to have our non-current assets. Then for our non-current assets, remember we've got property, equipment, and vehicle that we prepared the note for. Property, equipment, and vehicle. And then the first note is the one that is giving the calculation of that one, property, plant, and our vehicle. So on the first note there, the figure that we got there for property, plant, and equipment was 600,588. So we are putting it here, 600,588. And then we also have some, if you go to the question, I would see that we also have financial assets. That is our fixed deposits, financial assets, which is our fixed deposit. So if you go there, let's go and check the figure that we have in terms of fixed deposit. So on fixed deposits, the figure that we have there, let's this one, we have got 48,000 here, 48,000. So we can go and put it there. It's 48,000. We have 48,000. So to get the total non-current assets now, we are now adding 600,588 plus 48,000. We get 648,000. So this is what we have in terms of non-current assets. Then we can go to current assets. So on current assets, remember, we did also a note for trade and other receivables. Trade and other receivables. Trade and other receivables. And remember, the figure that we got there on trade and other receivables was 34,452. 34,452. And then we can go to the question to check what other current assets do we have. We can go to the question to check what other current assets do we have. So on other current assets that we have there, you see that we have trading stock here. We have trading stock here of 39,300. Then we check if you've got any other stock that is there in terms of stationery. We've got also consumables. So we can go up to check if we have got any other that is there. Any other that is there. So you'll see that we have here again consumables of goods. So we are going to say 570, 570 plus the figure that we have there for stock, 570 plus this one, which is 39,300. So we are saying trading stock is equal to 570. We have 570, and then we get 39,300. 39,000. So our 570 is not 1,000, just 570. Then we add our 39,300. Then we get our final figure for trading stock, which is 39,870. 39,870. So this is what we have. So we are going there to put that figure, 39,870. So we are saying here, we have our stock, our trading stock. There we have our trading stock. Whereby in brackets we are saying 7,300 plus 570. And then the final figure that we are getting there is 39,870. Then we can also go and check a figure for cash and cash equivalents. Cash and cash equivalents. We can also go and check that figure for cash and cash equivalents. And there, so we go to the question to check the figure for cash and cash equivalents. Cash and cash equivalents, we see that we have here we've got a cash plot. We have a cash plot here. We have a cash plot here representing our cash and cash equivalents. So for our cash and cash equivalents, we've got our cash float here, which is 2,400. So we check for the figure for bank. We also check for the figure for bank there. We try to see what we have in terms of bank. Then the figure for bank that we have is here. It's a credit balance that we are having there. You'd see that bank is here, but it's a credit. So it means it's not going to be under current assets. This one represents a bank overdraft. So we are going to put it under current liabilities, 21,750. So we are not concerned about this one. We are only concerned about the 2,400 for the cash floats. We are only concerned about 2,400 for cash flow. So we are just going to put that one, 2,400. So here we've got only 2,400. 2,400. So this represents this marks the end of our current assets. This marks the end of our current assets. So we can add there so that we get the total for current assets. So for the total for the current assets, we are adding 34,452 plus 39,870 plus 2,400. Then we get the total that we are going to put here for current assets, which is 76,722. 76,722. So this is representing our current assets. So this is what we have in terms of our current assets. Then we can now add to get the total assets. So here we can put our double lines. Remember, this is the first balancing figure that we are getting. So we are going to add 648,000, which is the total for non-current assets, 588. And then we add this one, 76,722. This is for current assets, and this is for non-current assets. To get the total assets here. So if you do that, the answer that we are supposed to get there is 725,310. 725,310. And this represents our total assets. So we can just maybe give the description there that that figure is representing our total assets. So here we've got total assets. So and this comes as the first balancing figure. Then from there, we go to the second part of the balance sheet whereby we are having our equity and liabilities. Equity and liabilities. And then for our equity and liabilities, we are going to start with the balance for capital. Remember, we calculated capital there, and this is the figure that we got, 592,065. So we are going to put this figure, 592,065. So we are going to put it in this column, 592,065. And beneath that, we go to our liabilities. And we are going to start with non-current liabilities. So here we have non-current liabilities. So for non-current liabilities, remember we are going to look for loan there. So the figure for loan that we have there is 87,000. So this is going to represent our non-current liability here. Non-current liability, which is 87,000 for loan. So we go there and put that figure, 87,000. So here we are saying we have loan, and it's 87,000. So we only have that one as our non-current liability. So it's going to come as the total here also for 87,000. So this is what we have. And then obviously, lastly, now we go to the section of current liabilities. We go to current liabilities. Current liabilities. So on current liabilities, we have trades and other payables. Obviously, that's the first one, trades and other payables. We do not have any note there that we calculated there. So we need to go to the question and check in terms of trade creditors. and then other adjustments that might need to be done there. So if you come here, you see that the figure for um, trade creditors that we have, we'll check what figure are we having in terms of trade creditors. We are not having it here. So it means it's just beneath there. It's just beneath there. So the figure for trade creditors that we have is here, which is here 16,980. Then we check for other payables. Other payables, we check for accrued expenses. We are having accrued expenses here, and but we don't have a prepaid income is not there in the question. So we are only going to pick accrued expenses, which is 7,650. So we are going to take 7,650. Then we add to 16,980 to get the total for trade and other payables. So we can go back there. Then we can summarize the working there, whereby we are saying 16,980 and we added 7,650. And then the total, we are going to put it here as our current liability, which is what? 24,630. And then we remember we have that bank overdraft that we identified when we were on current assets, bank overdraft. We can then go there to check what we have in terms of the figure for bank overdraft, we have it here. Bank with a credit balance in overdraft, 21,615. So this is the last figure that we're going to put under current liabilities. We don't have any other current liability there. There, so we are saying we are having 21,650. Then obviously now we add the two, 24,730 plus 21,715 to get the total for trade and other payables here. So if you add there, you are supposed to get 46,245. 46,245. Then this is what we have now. So we are now going to add our capital plus non-current liabilities. So what are we saying? We are saying capital plus our non-current liabilities. Then we add our current liabilities to get the figure for the second balancing figure here. So the figures that we have there for capital, remember the figure that we got for capital, we are having 592,000, 592,065. Then for non-current liabilities, we have 87,000. Then for current liabilities, this one, which is 46,245. 46,245. Then we add them. The total that we are going to get there is going to come here as our second balancing figure. And obviously, it's going to be 725,310. That's the figure, which is similar to the figure for total assets. So what does it mean? It means this balance sheet just summarizes the accounting equation, whereby the accounting equation we are saying assets, which is our total assets, is equals to our capital plus our liabilities. This is what we did there. We added the figure for total assets there, and then we got 725,310. Then we integrated or added capital plus liabilities. Then we got again the same figure, 725,310. And this shows that your balance sheet is balanced, and the balance sheets are yes to balance according to our international financial reporting standards. So this is what we have in terms of the preparation of the balance sheet, and then the notes to the balance sheet again as we did. I hope this video was very helpful. We'll meet again in the next video. Those who haven't subscribed, please subscribe and share. We are still coming with more videos that we are going to assist us for our exams. As for this video, I'm signing out. Oh, 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 oh.